Welcome to Alive and Seasoned. My name is Charity and I am a life coach. And it's always a joy to come and share some thoughts and some insights concerning life on this channel. And I believe that the video that I share, the information that I share, the insights that I share, mainly they are from my experiences and listening to different ones and having conversations with different ones during the different coaching sessions. And so I share this information because I know it will help somebody, and I know that it will add value to somebody's life, and that is what this channel is about. So if you have not subscribed to the channel, please go ahead and subscribe, and feel free to share this information with your loved ones, with your colleagues, with your family, with anybody that you believe will benefit from the information that I share. And so on to our video. This particular video, I will be talking about separating your personal money and your business money. This video is actually a follow-up on the video that I did on the 7 things that you need to consider before you start that business. And if you have already started the business, or if you're intending to start a business as as an alternative source of income, whether you're employed or that will be the primary source of income for yourself, there are simple things that sometimes we tend to overlook, and yet they make a big difference in life, and yet they make a big difference in the things that we do. So in this video, I will share just very simple insights on how you can separate, how you should separate your business money and your personal money, and probably also understand why it is important. So the question of establishing a business is a great idea because it's an opportunity to grow, and yet it's also an opportunity to generate, a new income or extra income. But then it's also a great opportunity for you to grow to the place that you want to grow. Sometimes when you are employed, there are many players in the game, and as such, you might not be able to probably grow to the place that you want. But when you run your own business, it's a great opportunity for you to grow your personal brand to the greatness that you have always wanted. And when you start a business, it is a great thing, it is a great idea, it is always a great thought, it's always a welcome thought. However, like I said in the video on the 7 things that you must consider before starting that small business or that medium enterprise, you must be ready to build the necessary muscles to keep that business as a going concern. In fact, research shows that many small and medium enterprises die, within the first 3 years of their existence. And it is because, business owners in that category often overlook simple principles that add a lot of value to the business. And yet when overlooked, like if you overlook these simple principles, what you're simply saying, you're killing your own business, or you're destroying, or you're bringing down your own business. And of course, if you bring down your business, then it means that income that was coming from that business, becomes no more. So it's important that we understand the simple principles of business. And one of those key principles in running a successful business is learning to separate your business money and your personal money. In fact, let me emphasize that your business money is not your money. Your business money belongs to your business. Even though you are the owner of that business, the money that is for your business, it belongs to that entity. In fact, if you actually look, and that is the world of business. That is why every business entity is registered, as as an independent business entity, independent of the individual, whether you are the owner or not. So it's important that you understand that, like, from the onset, that the money that belongs to the business, fine, it's you that put the money into the business. But once you have put that money into the business, then it ceases to be your money. It becomes the money that belongs to the business. And therefore, you need to treat that money as such and separate your business money from your personal money. So how do you now therefore apply that principle in practice in your business every other day? I will just share 4 simple insights that you, if you undertake, and of course there are many other, things that you probably already know or you might learn as you go by. But I will share 4 simple principles, 4 simple insights that you could actually use in your business so that you'll separate your business money and your personal money. And of course, as I always say, I like, when people write, it's always important when you write. So you can write if you want to write, or, well, just listen and probably, download the video and keep listening to it until you have mastered the simple steps and the simple insights. So the first thing that you need to do, as far as separating your personal money and your business money is concerned, outline what your recurrent expenses are. Pen and paper. And when I talk about your monthly recurrent expenses, we are talking about your rent. If you're renting a premises, we are talking about your utility bills, some electricity, some water. Even if you're vending, products on the roadside, or if you're running a small shop, or if you're running, there's some utility bills. You probably have to buy some water every so often. There's electricity bills. So we're talking about logistics, cost. When you pick your goods from point A to point B, from, where you buy your stock from to your premises, there is a logistical cost. So understand and outline what those costs are, monthly recurrent cost. If you're running a small business and you're not paying, monthly rent at a premises, there is the small licenses that are expected probably by the county government, and they are paid either daily or weekly. So outline what those costs are and be very clear and know exactly how much you need to spend every month on those expenses. And then number 2, and very, very important, is determine how much you will pay yourself. Actually, this is usually the breaker of everything, because most people who own small businesses and medium enterprises, they just pick money as and when they want to pick money from, the business or the shop or the premises. And that is not the way to go. The right way is determine how much you will pay yourself monthly. Remember, this is where you're earning from. So you're not expecting, an income from anywhere else. So once you determine how much you will pay yourself every month, then that is the money that you will draw from the business as a salary for yourself. And it is important that you actually get the discipline of only drawing from the business that which you have predetermined is your salary. And of course, it's important that you realize here that whatever is it that you pay yourself must be an amount that is less than your monthly proceeds. Because if, for example, your turnover is 20,000 per month, I'm just using an example, and then probably your monthly recurrent expenses, your utilities and all that, say maybe you spend about 7,000 per month, your logistical cost and all that, 7,000, and then you pay yourself 20,000. Where will the money come from? So it has to be, whatever you pay yourself has to be an amount that is less than your proceeds. So if, for example, you are making 20,000 in terms of, your earnings in a particular month, then your utility bills are 7,000. Then you can only pay yourself something about 13,000 or less. So probably you pay yourself 10,000 because you also need money from the same to restock. So if you take the entire amount, what will happen? You will keep drawing from your business every day, and then eventually the business will die because you will not have capital to run on, and then you will say the business is not working. It's not that the business is not working. It is that you are drawing money that is not yours from the business. And let me also emphasize that if you draw money, more money than your predetermined salary from the business, then you should consider it as a loan, as an advance salary or as a loan. And you will need to repay that back into the business. So very, very important, determine how much you will pay yourself. And of course, you can only pay yourself an amount that is less than what your total proceeds are. Otherwise, you will kill your own business. And this is where many people actually just, break the business. This is where the business then goes down because you have not learned that discipline. And once you have determined what your paycheck, what your salary, what you will pay yourself at the end of every month, keep that discipline for a prolonged time. If you have worked probably in a company, you have been employed before, salary reviews are often done at the end of the year, at the end of every financial year, at the end of every calendar year. Then depending on how the company has performed, then salaries are reviewed. And of course, if the company has performed well, then most likely every employee will get an upward salary review. But of course, if the company has not, performed well, then there might not be a review. It's the same principle. So even when you're running your own business, don't decide this month I will pay myself 10,000 and then next month I will pay myself 20,000 and then next month I will pay myself 30,000. You're simply just killing your own business very slowly. So predetermine how much you will pay yourself and only review that amount at the end of the year when you have looked at how your business has performed, and therefore you are saying to your business, and therefore your business is saying to you, I can actually pay you more. And number 3, another thing that is very, very key and important as far as learning to separate your business money and your personal money is concerned, open a bank account for your business that is separate from your personal account. The danger of running, your business money and running your business money with your personal account is you will never distinguish the difference. And every time you need money, you will think there is money because you can see it and you will spend it for personal reasons. But when you have a separate bank account for your business, it means what belongs to the business will be transacted from the business account, and therefore what belongs to personal will be transacted from personal account. So open a separate bank account for your business. This is so important. It's a very simple thing, but yet many people overlook. Of course, if you have not registered, say, your company your business as a company, or as a corporate where you have all the other requirements that come with it, you could just simply open a different account. You can, give it a unique name. You can even give it your name, but that is for your business. And then you have your personal. So you separate the two. Do not be tempted to run your business money in the personal account. That is just creating trouble for yourself, and that's the reality. So open a different bank account for your business. If you do not have, the necessary registration for your business, just open a different account in your name, but in your mind that account belongs to the business, okay? And as such, you cannot run it like it is your personal, account. And then, of course, make all the transactions that pertain to your business from that account. And at the end of every, at the close of business every single day, whatever your proceeds are, put them into that account. And when you put them into that account, then transact, in and out of that account as far as the business is concerned. Whether you're making your purchases, whether you're making, you're making your payments for your, monthly expenses, whether you're paying yourself a salary, let all the proceeds of the business go into the business account, and then out of that account, make the necessary payments that you need to make every so often in the month, and of course, finally, annually. And number 4, and also a very simple thing that, many small business owners overlook, keep a cash book. A cash book is a very simple, a record of your in and your out, the money in and your money out, your daily sales and, your daily expenses. And I'm not talking about your daily expenses in terms of when you see, the lady selling the, that cake that you like passing by, and then you pick money from the business and, you buy your favorite cake and enjoy. That's not what I'm talking about. I'm talking about daily expenses that pertain to the business. If you must make any purchases for personal use, pay that from your pocket. That is why you're paying yourself a salary. So separate your pockets. The money in your pocket is yours. The money in the bank account is for your business. So the money in the cash book, in fact, have a separate pocket for, your business and for your and for your personal money. Let me use a very simple example. If, for example, you are vending, some items, on the roadside, as I'm just using this as a simple example. Literally have a small bag, have a little bag that is separate from your pockets where you put in this daily sales. That is, if that is what it must come to, so let it be. So if you normally put your personal money in your wallet, for example, if you're a gentleman, then the money for your business sales that day should be put in a separate pocket, even have a separate pocket so that all the proceeds for that day are not mixed up with your personal money. And so if you see, that lady who sells your favorite cake passing by, do not go to the pocket that belongs to the business. Go to your wallet and pick money from your wallet and pay for that. If you do not have money in your wallet, then it means you have exhausted your paycheck. Then it means you can only get money out of the business as an advance payment, as a loan from the business. And if you do so, then at the end of the month, when you're paying yourself your salary, you deduct what you used that belonged to the business. So keep a very simple cash book of your daily sales and your daily expenses. And of course, at the end of the month, do your balance and see what your sales have been, and of course what your expenses have been. And finally, at the end of the year, the year in December, when we are closing the year, that cash book becomes, shows you how your business has performed. And since you're able to take your stock at the end of the year, and what is still in stock, what you have sold, and what you have, what your expenses in the financial year have been, then you're able to see what your actual profits are for the year. There's a tendency for many small and medium enterprise owners thinking that they have made profit just because they are seeing the turnover cash. That is not profit. The turnover cash is just turnover cash, Profits is declared at the end of the year. So wait until the end of the year and balance your cash book. And if you need the assistance of, say, an accountant, somebody in accounts, ask them for the assistance, and I'm sure they'll be more than glad to help you balance that book. And then you will look and see what is your actual profit at the end of that year. If indeed you have made, profit, you have done your, recurrent expenses, you have paid yourself your salary, you have taken your stock, and of course you have even paid your annual expenses, for example, probably licenses, those expenses that come annually, then if there is an amount in excess, that is your profit. And of course, because you're the business owner, you can declare dividend at the end of that year. And because now that is profit, or you can plow back that profit into the business so that the business grows. So the temptation to have, to think that you're making profits just because you're seeing, turnover cash, that is deceptive. So, and the simple way is keep your cash book right, separate your bank account, and then at the end of every year, balance your cash book, and then you will be able to know how much profit you have actually made, and then you can reward yourself for the job well done in your business. And of course, as your business grows and as your business multiplies, then of course that means more income for you. And at the end, at the end of the year, if you have done well, if your business has done well, then you can review your salary upwards. That is what happens. And then, you can keep going until you grow, probably from a small enterprise to a medium enterprise, from a medium enterprise into a corporation. And of course, as you grow, there are things that you also must adapt to. So I hope the information that I have shared on this video and the insights that I've given will be useful to you. If you have any questions, please feel free to get in touch with me on the email that I provide here in this video. And if you would like a one-on-one coaching session on probably how to run your business or how to get started or any other matters concerning life, please feel free to also contact me on the email that I provide. Otherwise, stay alive and seasoned.